Hey, and welcome back to another video here at FiscalVoyage. And in this video, I'm going to talk about Workhorse Group. We're going to do a stock analysis, just do a little overview of Workhorse second quarter reports, the valuation, and some of my opinion about this company at current price. But before we get started, if you're new to the channel, make sure to hit that subscribe button, and as well as check out my free ebook in the description below, 5 quick metrics to look for before spending more time and hours in researching any company. Let's go over Workhorse Group reports second quarter results. They reported in August 20, and right now it's September 10th, so the stock is up a lot since then. But let's go over the quarter reports, and then we'll go over the evaluation of Workhorse. So some things to note: sales for the second quarter for 2020 were recorded at $92,000 compared to $5,500 in the second quarter of 2019. So that's a huge improvement. So that's very positive there. Cost of good, however, also increased to $1.5 million from $930,000 in the second quarter of 2019. And the increase was primarily driven by increase in labor and materials relating to the cost of the C-Series production. So even though they made $92,000 in revenue, it cost them $1.5 million to make the $92,000. And research and development expenses increased to $1.6 million from $1.2 million in the second quarter of 2019 as well. So that's another expense, subtracted from the $92,000 that was made. As you can see here, the increase was mostly due to increase in engineering, staffing, and consulting expense. Was related to the design of the C-Series. So we look at the net sales increase. You can see from 5,508 to the 91,942 that they made. It was an increase of 1,569%. So that's tremendous growth there. So that's very impressive for this year-over-year increase. However, you see here gross loss. They did lose more money than they did in 2019, of course, because of the cost of sales increase, as well as if you look here, total operating expense also increased from 3.2 million to 5.5 million, leaving the company with a net loss of 131 million compared to 20 million in 2019. And then let's do the percentage there. So we do 20.06. This was a loss of 554% decrease from the second quarter of 2019 compared to the second quarter of this year. And another thing that I don't like that I'm seeing here in the quarterly report is the assets. If you look at total current asset at 35 million, 202,003 divided by the total current liability 0.5241,094, we get a 0.33. This basically means that the company, the current assets and current liability is current assets is money or assets that they have that they can easily sell off or generate in the next 12 months. Total current liability is money that they owe in the next 12 months. So these are liabilities for the next 12 months. And you can see here with a ratio of 0.33, that means the company has a lot more liability that they owe for the next 12 months than current assets. So that's something to consider. The balance sheet is not looking too good here. So we look at the price for Workhorse Group or the Workhorse stock. You can see here currently is going for $23.28. It had a very tremendous run up in the past 6 months. The stock is up almost 845%. So that's outstanding. Very lucky or fortunate if you were able to buy shares at this price. So that's very well done. But right now, to me, the company looks overvalued, and we'll go over that shortly. So here's a fast graph for Workhorse Group or Workhorse stock. You can see that the black line is basically the monthly closing price. So it's not everyday price, but it's a monthly closing price. And you can see here since 5/29, earlier this year, it was $2.48, and then basically in a month, it jumped to $17.39. And then it dropped down a little bit to $15.52, and then currently $23.62 as of yesterday's closing. This right here shows me, how excited, people were, the investors, the traders were for this company during this time period. And right now it looks very dangerous. As you can see here, operating cash flow is expected to be much higher, 27% growth or 15% growth for the year, and 27% growth for 2021, and a 94% growth in 2022. So that's very great growth, but the fact that the company is at this price, it looks to be overvalued. I personally, if I was lucky enough to purchase share of this company at this price or this time frame, or even somewhere in the middle here, around $10 or $8, I would probably sell most of my shares and take some profit as well, and then just leave kind of the house money. If say I'm up to 800%, maybe I'll leave 100% of shares or 200% of shares and take out the 600 or 700% of profit that I made, and just use house money and continue holding to see if the company runs up even higher. But I'm very unlikely that the company will run up higher. This is a nice, interesting chart on bubbles. So if you look at this chart, this is, I kind of like this chart because you can see here enthusiasm, greed, delusional, and this is kind of where I see this company at, and it might drop. If we look here, it kind of like matches that, but just continue to go higher. But definitely, if I was, able or lucky enough to, or even aware of this company and purchase shares of around $3 or even $5, like I said, I'll sell about 700% of my shares that of profit that I made, and keep the extra 100% or 200% in it, just in case it continues to go higher. If it goes up to $25, $26, maybe sell another lot as well. But it's looking very dangerous here. So if we look at Morningstar rating here, they give actually a 3-star, so it's kind of fairly valued based on Morningstar, but the uncertainty is very extreme. And you can see here, price to sales is at 10,000. So that's like crazy. You like to see a company with a price to sell of 4 or 6, stuff less than that is better. The lower the number, the better. But this is a price to sell of 10,000. For example, if we look at Tesla, Tesla had a price to sell around this time period, I remember, about a price to sell between 2 to 4, I think. And then, so it had a great run up. So considering that this company has a price to sell of 10,000, it doesn't look too good, in my opinion here. So there you have it. Those are my thoughts on Workhorse stock. I think the valuation is very, very dangerous right now. If you were lucky enough to purchase shares, I think now is a good opportunity to sell some of your profits, to take the profits, take your initial money you put in, take your profits, and maybe leave some shares. It went up, 800%. Maybe if you were up 300%, 500%, or 600%, maybe take out, 400% of that, or and stuff like that. And, leave some for there in case it continues to ride up. But the valuation doesn't look too good. It has, as you saw, the price to sell ratio of 10,000, which is crazy. I like to see a price to sell ratio on growth company of 4%, 6%, and less than that as well. The company has a lot of things promising. I do like their business model, for the last mile. That's huge. And the autonomous and the drone, all that stuff is, that's the future. But right now the valuation does not make sense for me. So thank you for watching, and I hope you enjoyed the video. And again, if you're new to the channel, make sure to hit that subscribe button, as well as check out my free ebook in the description below. And I'll see you guys in the next one.